Welcome back to Invest Africa. According to one of the big four tax and advisory firms, investor perceptions have improved, which has led to an increase of FDI into Africa. The continent can now leverage on this source of funding to further power its economic growth through infrastructure development. Again, let's take a look.
Africa captured 5.5% of global FDI in 2011, which increased from 4.5% from the year before. The continent also saw a 27% increase in FDI projects for the same period.
So from the developing country perspective, I think we've seen them follow their own market needs to look for resources for their home markets. At the same time, we've also seen the more middle-income countries looking to their strengths in terms of coming to Africa with their own businesses. And from India, it's really been around services. India has a strong entrepreneurial class that is bringing services to Africa, whether it's IT services, renewable energy. At the same time, from China, their strong point has been manufacturing, and their manufacturing costs are growing in China. So they're bringing their manufacturing companies to Africa where they can reach similar standards at the same time at lower costs. So I think these are the type of investors that we're starting to see in Africa.
Despite the European economic downturn, investments from both developed and emerging markets still followed an upward trajectory, with projects from India, China, and Turkey in the lead. One of the projects that Africa saw was the turnkey agreement between JSE-listed company, Sepaku Holdings, and Sonoma, International Engineering Company of Beijing, for the establishment of one of Africa's largest cement manufacturing plant.
It's been a long time coming. We've been working on the project for 5 years now, and we're very excited that we're getting out of the ground. It took us a long time to get the financial package together, but we managed to do that at the beginning of last year, and serious construction finally started at the beginning of this year. We're going to be in cement production by August 2013. I think what also makes it special is a lot of European suppliers of mechanical equipment.
According to Ernst & Young, Africa is still lagging behind India and China, and investor perceptions are one of the contributing factors. And although it has improved considerably over the years, factors such as corruption and an unstable political environment rank high on the list that could deter investors.
Their ability to have regulation that is consistent and transparent. So I think this is something, IFC has been working with the African governments across the continent to try to improve the legislation around the private sector and around the standards needed to grow a vibrant and sustainable private sector.
It is recognized that infrastructure is a catalyst for economic growth and can pave the road to greater regional integration. And with the continent anticipating further capital inflows, Africa can realize its full growth potential. Dumisha Makhanyele, Johannesburg.
Still with me in studio, Emile du Toit, Head of Infrastructure Investments, Harith Partners, Paul Runge, the Managing Director, Africa Project Access, Brian Blake, Vice Chairman, Marsh Africa, and from our bureau in Nairobi, Gabriel Negatu, he's Regional Director of the AfDB's Eastern Africa Resource Centre. Gabriel, let's throw it to you. We had the South African President Jacob Zuma saying recently that Africans have got to stop being pessimistic about the continent and that we have to become leading ambassadors. What are your thoughts on that statement?
Well, I think I'll have to agree, absolutely agree with that. But optimistic we should be, but guardedly optimistic. There are many things that are going in the right direction. I think Africa is on the move. I know the East Africa region is a robust region on the move. However, we also have to be mindful of some of the setbacks that the continent continues to suffer from time to time, most recently in Mali, and of course Somalia remains a scar on the continent. So what this needs is really guarded optimism, but certainly we should stop being pessimistic and be very optimistic. The resource demand for Africa's resources is high. Africa is a great investment destination. Governance is looking positive. The economic productivity, performance growth, they're all pointing in the right direction. So I will have to be very optimistic and share that sentiment also.
Brian, I want to bring in austerity measures in Europe and in other territories within the developed environment. How is that going to impact the Africa story? Are we going to see ourselves at more of a disadvantage when it comes to trying to close that infrastructure gap we spoke about in the beginning?
I mean, personally, I think that it's an opportunity. I think that certainly as a company, we're seeing the opportunities presently in Africa rather than Europe, rather than North America. If you look at the projected growth rate in Africa, it's where the opportunities have to be. Now, it's always been the case in Africa that the greater the opportunity, the greater the challenge. And we've seen that in a number of countries. But if you look at the resources available, if you look at the need to have this infrastructure program implemented, Africa has to be a glass half full, in my view.
Rather than a glass half empty, that is, of course. So let's look now. We're using this term infrastructure relatively broadly. What are we talking about here? Is it roads? Is it railway? Is it really about transports and logistics? Is it power stations? Is it dams? Is it across the board? When you look at infrastructure, how do you break it down?
Well, as we're monitoring projects all the time, I can tell you it's across the board, most definitely. But certainly certain emphases, like for example in ICT telecommunications, it's been lower hanging fruit. And there's been much more activity in that area, as we all know. And when you get to a difficult sector like rail, which is very high capital amounts required, it is difficult. But that being said, at the moment, the evacuation and the export of the commodities, as I mentioned earlier on, rail is the only way to go. You can't do it by road truck. You just have to do the rail. So rail is at long last getting its place in the sun. Power is generic to everything. It's, as you said earlier yourself, Bronwyn, that's the key issue. I just want to say quickly something about the European story. I've just come back from Germany and Austria, where we were addressing subject of risk in Africa, and the rooms were full, absolutely full. The situation has globalized so much now that, and also in connection with the previous discussion about vote of confidence in Africa, Africans are voting with their money in Africa. Oando, Dangote, these are two Nigerian players, but the others too that are actually, so we're seeing everybody involved now, not just your former colonial countries, but now China, Russia, but also Turkey, and it's an enormous range of people playing.
And of course, Africa coming up with its own success stories, as mentioned there by Paul Dangote, is worth $13.3 billion US dollars, outranking by far Oprah Winfrey and even our very own Patrice Motsepe. I thought I'd just throw in a bit of trivia there for you. Emile, in terms of what you're seeing, the hotspots, so if you were to break down infrastructure, what would that be?
If I look at our investment pipeline, the majority of this stage is still on the power side, both renewable as well as thermal power. Mostly generation, but also some distribution businesses. And then, that's almost 50% of our pipeline. And then the rest of it is mostly taken about transport. And then a little bit on the telecom side as well, more on the broadband, telecoms, etc. But really the areas that we see the biggest investment opportunities are power and transport. On the transport side, both ports, airports, road and rail. And then, as I said, the power side, that is all across. We see smaller hydro projects in let's say, more risky countries and smaller countries. And then you see some of the larger projects in Nigeria, even the Nigerian privatization currently happening in its power sector. So we're seeing both on the west and the eastern side a lot of opportunities on power and transport.
Gabriel, your hotspots in terms of focal areas where the African Development Bank is concerned?
Well, for us, I think it will have to be power and transport. I think in power, both in terms of generation and distribution, we see a lot of opportunities and potential. Most of the countries in the East Africa region have recently come up with all kinds of minerals from Tanzania to Uganda to Kenya and South Sudan and possibly Ethiopia coming up. So power will remain a big issue. Next is transport. The multinational transport projects that we're doing, Kenya, Tanzania, Kenya, Uganda, Rwanda, Burundi, these are and then the connection with the DRC. These are the great enablers that will facilitate regional integration, which is one of our top priorities. So we see the transport sector as being a key. And then railways. We've got this big project coming up, Dar es Salaam, Isaka to Musongati and Kigali. again, a very high capital intensive project. We've just done the East Africa Railway from Mombasa to Kampala, so transport next to energy will be a big one.
What about the Cape to Cairo project? Are we seeing that coming to fruition? Much was made of the project at the World Economic Forum. We know that it is set to link 598 million people, 26 countries. Gabriel, just your thoughts on this project?
Well, we've just given award for the Ethiopia-Kenya connection, which in effect now enables a businessman from Cairo to drive all the way down to Cape Town. So this will be the last leg of that connection, and it will certainly facilitate regional integration in the COMESA region. So yes, we are very much making that happen.
Intra-Africa trade, now currently sitting at around 10%. If we close that infrastructure gap that I alluded to earlier in the conversation, apparently we can double intra-Africa trade. Does that sound like a realistic goal?
I think so, provided that all things are equal. And two of the things that have been said in terms of prioritisation of infrastructure, I was also going to say, which is power and which is rail, not just transport. If you look at the state of a lot of the African roads, we do need an effective rail system, and you can't have an economy without adequate power. We've seen that ourselves. So, and the power projects, the hydro projects that are in place at the moment would facilitate that, and then you can export the power, which is part of the inter-regional trade as well.